Hi, everybody. It's Peter Schiff. It's Tuesday, September 28th, 2010. Well, we had another record high in the price of gold today. I think we're up just over $10 an ounce. Silver, a new 30-year record, well over 21. I think it was up about 30 cents. The Swiss franc also hit a new record high today. It costs more than $1.02 to buy a Swiss franc. You know, the race now to be the next major currency to break parity with the dollar is going to be the Australian dollar, which hit a new 52-week high today, and the Canadian dollar. You know, they're about a penny apart. The Canadian dollar is a penny closer to a dollar, but based on the charts, my money is on the Australian dollar to win the race, although ultimately, and not before too long, both currencies will be worth more than one US dollar. You know, let's go over the catalyst today for the dollar rout and gold surge. I think it was some weak economic data, particularly the way the market reacted to the consumer confidence data. We had this report that came out this morning that showed consumer confidence plunging to 48 from 52 last month. They said, of course, it was unexpected. You know, I don't know why everybody is so surprised when we get bad economic news or when consumers express a lack of confidence. I mean, what do they expect? The reality is consumers should be anything but confident. And you know what? That's actually a good thing. We don't want consumers going out there and buying stuff when they're already broke. I mean, here you've got American consumers. They're living in houses where they're underwater. They have no equity. They're loaded up with debt. They got credit card debt. Maybe they got student loans, car loans. They're fearful of losing their jobs. Yet Wall Street is upset because these individuals are not rushing to the malls to buy more stuff that they can't afford. You know, we want cautious consumers, but Wall Street wants them being reckless. They want everybody being reckless, so we'll spend money we don't have and borrow money to do it, feeding their credit profits. So we want consumers to be frugal, to save their money. But now the original reaction in the market, if you watch the S&P futures, there was a sharp sell-off as soon as we got this news. Gold, which was up, dropped sharply, maybe about $7 or $8. The dollar, which was down, rose to positive because the old trade, or the trade that took place through most of 2008 and 2009, is when there was what was perceived to be good economic news. You bought everything. You bought stocks, you bought foreign currencies, you bought gold, and you sold dollars. When bad news came out, you sold everything and you bought dollars. So that was the initial reaction. Oh, well, bad news, sell everything and buy dollars. But then gold was the first thing to turn around. Gold all of a sudden started to move up, and gold went positive long before the stock futures turned positive. And then stocks started to follow the price of gold higher, and the dollar went lower. And by the end of the day, gold was at a record high. The dollar index closed at a new low for the move, below the 79 handle, just in a high 78s. And as I said, other currencies hit 52-week or all-time highs. And the Dow managed to eke out about a 50-point gain. So what happened? Why the turnaround? Well, here's what people are starting to figure out. Bad economic news increases the odds of Fed stimulus, of quantitative easing. And the worse the news, the more likely the Fed will be to ease. And so what you're seeing now is bad news is actually quote unquote good news for stocks. Now, it's not actually good news, it's horrific news, because the bad news means we're going to get more inflation, because that's what quantitative easing is. So stocks are selling off, but now the market is figuring out, wait a minute, the Fed's going to create more money. That's going to destroy the value of the dollar. We need to get rid of these dollars, and so we'll buy things with them. Now, the smart money is buying gold. The money that's not quite as smart is buying U.S. stocks. Now, there are other things you can buy. You can buy foreign stocks. You can buy commodities. But the one thing you want to sell is U.S. dollars. Now, of course, the dumb money is still buying treasuries because quantitative easing has a two-part process. First, the Fed creates money, and then second, it uses that money to buy treasuries. So you still have treasury bonds rising because of quantitative easing. But at some point, people are going to figure out that the asset class that's most damaged by quantitative easing are bonds. Even though the government is printing money and buying those bonds, the act of doing that debases the value of the dollar, which is what those bonds are based on. Because remember, when you own a bond, all you have is a promise to be paid dollars into the future. So that bond represents the present value of those future payments of both interest and principal. But the more the Fed creates money, the less the future value of the dollar is, and the less valuable those bonds are. Now, at some point, we're going to start to see the bond market tanking along with the dollar. And when that happens, the Fed has lost control of interest rates. Now, what the Fed might try to do is be even more aggressive and say, well, then we're going to have even more quantitative easing. We're going to buy even more bonds in a vain attempt to try to get the bond market to rally and rates to fall. But all that's going to do is debase the value of those bonds even further, because the more the Fed creates inflation, the less those bonds are worth. You know, it's very funny. I happened to see a guy talking on CNBC the other day, and he was a dollar bull. And he was actually saying the reason he's bullish on the dollar is because he said, we're the only country with a strong dollar policy. Now, maybe he meant a strong currency policy, but the reality is that policy means nothing. We have no strong dollar policy. We have a weak dollar policy because everything we do weakens the dollar. Now, we pretend we have a strong dollar policy by saying a strong dollar is in the national interest, which of course it would be, but we're not going to get a strong dollar. And I've said in my books, it's like a kid telling his parents he has a straight A policy. That's a great policy, but if the kid doesn't study, if he skips class and smokes drugs, he's probably not going to get straight A's, regardless of what his policy is. Well, that's the strong dollar policy. And the fact that people think that we're going to have a strong dollar because we have some kind of policy is absolutely ridiculous. Now, also, I wanted to give a little bit of an example of how government regulation hurts a business, not as an academic, but as a real businessman, to let you know a couple of things that I'm doing now in response to government regulation. The first thing is, I run a brokerage firm, Euro Pacific Capital, for years. I've never had an account minimum. I've allowed anybody to open up an account, no matter how small, but that's changing. I'm now imposing a minimum amount to open up an account. I'm also requiring a minimum net worth and a minimum income level. Now, why am I doing that? It's because the government has made it so complicated. The rules and regulations are so cumbersome and so expensive that I am losing a lot of money on the smaller accounts, more than I can afford. I'm a business. I'm not a charitable entity. So because of government regulations, I'm going to now have to refuse to do business with clients that, absent that regulation, I could have profitably serviced. But the government has made that business unprofitable. So not only is my business going to be smaller with fewer clients, but there are clients who are going to be denied my service. And these are the very small investors that theoretically these rules are designed to protect. Well, now they're losing my services. In fact, the government is going to make it so expensive to deal with the little guy that nobody's going to be willing to deal with him. And so the little guy's going to have to fend for himself with a discount broker. That is the unintended consequences of these regulations. Now, another problem is I've had so much problem over the last year with regulations. I haven't been able to open new offices, hire new brokers. It's been very frustrating for me. And what I'm actually doing now is I'm opening an offshore business to service international clients. I'm opening up a foreign broker-dealer to do asset management and brokerage. And I'm going to be concentrating my future capital investments and my future hiring outside the United States. Now, I would prefer to expand my business here. I would prefer to handle European customers or Asian customers from my U.S. account, my brokerage firm. But regulators are making that impossible. So instead, I'm going to service those customers from a newly created company outside the United States. I'm going to be hiring workers outside the United States. I'm going to be making capital investments outside the United States. Not because I want to, but because the U.S. government is making it impossible for me to do it here because the rules and regulations and the taxes. And now there is one new company that I have started in the United States, and that's Euro Pacific Precious Metals. And my fear there is that now that they're having government investigations of precious metals industry because of companies like Goldline that have been charging such horrific markups, I am afraid that we might get more regulation in the one area where I am expanding and not having a lot of government regulation. I noticed a guy wrote an article because I talked about Goldline and the investigation on CNBC on Kudlow's show the other day, and somebody said, well, here's Peter Schiff. He pretends to be a libertarian, but not when it's involving one of his competitors. I said, I am against the government interfering here. I think the market should set prices. If Goldline wants to charge these horrific markups, I don't think it's illegal. But what I did say is if Goldline is committing fraud, and that's a legal question for a court to determine, but I do think that the government should enforce the laws against fraud. That does not make me a hypocrite. And it means that I'm an honest person. I believe in limited government, not anarchy. Take care, everybody. So long.